In July and August, the CPI inflation, which is essentially a measure of retail inflation in India, went above the upper limit of the Reserve Bank of India's tolerance limit of 6%. In September, India's retail inflation rate came in at 5%, falling below the 6% upper tolerance level for the first time in 3 months. Now, when we consider the inflation number for September, the CPI inflation has averaged around 6.4% for the second quarter of the fiscal year 2024, and this is pretty much in line with what the RBI had estimated. If you take a look at the contributions to inflation, it becomes very clear that most of the recent volatility is mainly due to fluctuations in food prices. In fact, food inflation dropped to a 3-month low of 6.56% in September. The primary reason behind the decline in food inflation is because of vegetable prices, which decelerated significantly to just 3.4% and declined 16% on a month-over-month basis. Now, even the core inflation, which excludes volatile food and energy components, fell below 5%. This was driven by a broad-based easing in various segments like housing, clothing, footwear, and other services. Overall, the correction in food prices, especially in vegetables, has played a significant role in bringing down inflation in the country. But the future path of inflation is still uncertain, as one big factor is the monsoon, which has been a bit uneven lately. And then we have these near-term risks to the inflation outlook due to the unpredictable fluctuations in global crude oil prices. Next up is the Industrial Production Index, which reached a 14-month high. The IIP is an index that tracks manufacturing activity across various sectors of an economy. It is an indicator of the overall economic health and activity levels. In August, the IIP printed a 14-month high of 10.3% from the 6% it registered in the month of July. The August number was boosted due to a favorable base effect, as the IIP had registered a contraction of 0.7% in August 2022. Now, when we look into the breakup of this growth, we observe that mining and electricity sectors played a significant role in supporting the growth. When we look at the use-based classification, primary goods, capital goods, infrastructure goods exhibited double-digit growth. All in all, the IIP registered a healthy growth on the back of a broad-based improvement across all subsectors and use-based category, helped by a favorable base effect. Having said that, this is me, Merlin Susanna, signing off. Take care and stay invested.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.